The U.S. national debt just hit $37 trillion, and it's growing by $1 trillion every 5 months. That's not a typo, Cory. $1 trillion every 5 months. So the main culprits of this, Cory, are the pandemic era stimulus and the recent legislation. There's an argument that that's actually going to add to the debt. But before we go deeper, Cory, here's my question. Who cares? Why does it matter? Who cares?
I think that we should all care.
Okay. Why?
The reason that I think it matters is because the national debt is not something that can just be ignored in perpetuity. Like there will be consequences for it. It's just a matter of what they are and when. It's like my perspective around this is that, the more debt there is, there's going to be pressure to move interest rates higher. More tax dollars for taxpayers, me and you, Jake, and anybody who's watching this show, are going towards interest payments that the government is paying. From my point of view, it's just the fact that this is the issue that needs to be addressed, but it's not being addressed.
But why would the Fed raise rates? Wouldn't that make the debt worse?
It would.
So why would there be pressure to raise them?
Because if the Fed lowers interest rates, right? If the Fed keeps the short-term interest rates low, the Fed funds rate, the long-term interest rate on bonds is based upon investor expectations. So just to kind of think this through simply, Jake, my point of view here is if we know the government just raised the debt ceiling by $5 trillion, they're going to borrow and spend a lot of money that they don't have over the next several years, in addition to the debt that's already there. So my question would be, why would someone want to invest in a 30-year treasury bond, especially someone outside the United States, if we know that they're going to pay the interest on those by borrowing money?
And I think that's the issue. And that's good.
Correct.
Because I think the underlying issue then is if the government has to issue more bonds to service their spending, they're going to have to issue those bonds at higher rates to get anybody to invest in it. Because you're right. Why would they?
To bring a buyer to the table.
Yes. So I think a lot of people don't understand that. And that's why I kind of tricked you with that question, just to see what you would say.
You didn't trick me.
I did more research. So that's the issue, Cory, is that there will be upward pressure on rates because the U.S. will need to issue more debt. And to get people to buy that debt, they're going to have to pay more interest. It's just like if you said, Jake, I need to borrow money, I'm going to pay you 1% interest back. I'd be like, sorry, I don't want to loan it to you.
That's right. And the higher likelihood, sorry, Jake, go ahead.
No, but if somebody said, I'll pay you 10% interest and I'll pay you back in 6 months, well, that might pique my interest a little bit, because I'm going to get paid more interest. So that's the whole point, is that they're going to have to issue bonds at higher interest payments. What were you going to say?
If we do just take a step back, though, $37 trillion was the number that you started with. That didn't happen overnight, right? That's happened over many, many years. And it is a nonpartisan issue as far as our country goes, as far as I'm concerned, because of, the structure of who's been in power. But at the end of the day, my concern, Jake, is just that taxpayers, retirees, people planning for the future, those are the people that are going to be paying the interest on all this debt.
Yeah, and I think the real issue for retirees is that the higher the debt is, there's greater risk of policy changes.
Correct.
Entitlement reform, like your Social Security more than likely will get messed up, or they're just going to have to raise taxes.
That's right.
But, it's just interesting to me that I think the last time we had a balanced budget was when Clinton was in office, right?
Correct.
And when was that? It was the 90s?
In the 90s, yeah.
So we're talking
early to mid-90s. Newt Gingrich was the Speaker of the House.
We're talking like
I know this for a fact.
25 plus years ago. I kind of said that just to start the debate, but what does it really matter? Because it doesn't impact me yet. But
that's right.
I think that's your point, is that if something doesn't get done, it will trickle in. And in the end, it's you and me and the rest of America that's going to have to pay for our government's mismanagement of funds. But I don't know what the answer. What's the answer?
The government needs to spend less money.
Well, when they came in, everyone got mad because Elon Musk was cutting everything.
And he didn't cut anything. He cut something, but look at if they needed to raise the debt ceiling by $5 trillion, what spending did they cut?
Yeah, and I don't like that this new bill, the One Big Beautiful Bill Act, increased the debt. I don't understand.
That's right.
I don't understand why they would do that. I think they did it, Cory, to gain popularity. I thought
sure,
because if you think about the One Big Beautiful Bill, it impacts everybody. Everybody in America in some form or fashion is benefiting from that. And I think people will say that's a great thing. However, on the back end of it, it's increasing the debt. And so it's just you can't have your cake and eat it too. So if you want this benefit or this increased tax savings, you have to recognize that at some point, somebody, maybe it's the next president after Trump, somebody's going to have to come in and make some tough decisions to get the ship turned around, or it's going to be far worse. But I'm
There's
sure
no political courage for anyone to do that right now, Jake.
Yeah, why would anybody do that? Why would anybody do that?
Not right now.
I don't know.
I mean, presumably the reason they will is because they have to. And the longer that the debt, the last point I just want to make here, Jake, I'm going to share my opinion. 15 years that you and I have worked together. When I started working with you, Jake, 15 years ago, the national debt was an issue. Social Security funding was an issue. Medicare funding was an issue. 15 years later, do you know what's been resolved? Nothing.
None of it.
We're just closer to those issues creating bigger challenges. So like my perspective is just, there's not something specific, Jake, for me to, or you or anybody who's watching this to do around that, but to be aware of it and recognize that it's reality because we live in the real world.
If you're at or nearing retirement and you hold a lot of bonds, or depending on Social Security and Medicare for the next 30 years, this debt trajectory does matter to you. So it like you said, Cory, like I posed the question, like what, who cares? If you have bonds or if you're going to get Social Security or Medicare, the debt trajectory matters. And the smart money is already planning, this is what it's getting at, for higher taxes and potentially lower benefits. Now, we can model all of this out in your financial plan. And our key with our clients, Cory, is that we like to make sure there's a buffer or there's a cushion for exactly these type of, you could still call this unforeseen because we don't know exactly what's going to happen, but we want to have some wiggle room in case tax brackets have to go up or in case Social Security benefits have to go down. So for our listeners out there, my question is, and I'll ask you, Cory, because I can't hear our listeners because they're listening and I'm talking, but my question is, do you believe our government can manage this debt responsibly? Or do you think future retirees are going to have to pay for this? What are your thoughts?
Future retirees are going to have to pay for it.
Yeah. So that's why we want to plan smart. We don't want to be so aggressive where we delete Social Security from your financial plan. My point is, if you live off of $12,000 a month, we want to make sure that you can afford 13 or 14 just in case things get a little tight, right? That's what I'm talking about. We provide a little bit of a buffer in there, a little bit of a cushion. Because you know what? If you say, Jake, Cory, I need 12 grand, but the plan says you can afford 15, well, if your Social Security gets cut by 1,000, well, you're still within range, is my point. So that's how we create that. Or your taxes go up and you've got to pay another $12,000 a year in taxes. Well, you know what? We had that $1,000 a month buffer built in. We had $3,000 a month built in. So again, that's the key with the debt. It does matter. It's a really big number, so it seems ginormous, Cory. So I'm just curious to see who in the heck is going to get this figured out. I don't think our current administration is going to do it because they don't have to. I think it's going to be on the next wave. I think in 3 or 4 more years, that's when we're going to need to make some changes. And I think the next election is going to be very important because of that.
Right. Yeah. And I think it makes a lot of sense, Jake, right? The whole approach, like at the beginning of this year, cut out wasteful spending, save money where you can. All of that makes good sense to me. But raising the debt ceiling by $5 trillion after all of that does not.
Well, they have to do that. They have to do that because you don't want the government to shut down. You have to raise the debt ceiling like that. I get that frustrates you, but there's not another option there.
I realize that, but it feels very disingenuous to be cutting to pose the efforts to reduce spending when that's happening with the debt ceiling on the back end.
Yeah, but they had to do that. That's I think you're overreacting to that because the debt ceiling has to be raised for government to function.
That's right.
It's not going to be they can't cut things and then immediately impact that. Like the debt ceiling being raised is a byproduct of years of overspending, not just months.
Right.
I agree with
you.
But
they need somebody to buy the $5 trillion in debt.
You're saying it's going the wrong direction, which is right. All right, let's go to the next one.
Let's move on. Good. All right.
Yeah, let's go to something else. Go to the next one, Cory.
All right, Jake. So what we have next here, working mothers wane. So in just 6 months, Jake, over 212 working mothers have left the workforce.
No, 212,000. Don't leave that out.
212,000 working mothers. Sorry, 212,000 working mothers have left the workforce, which is more than a statistic. It's a signal.
To what? What's the signal, Cory?
Childcare costs are surging. Flexible work is going away. The longer term impact of this, particularly if working mothers are leaving the workforce, is lifetime earnings, the ability to save for retirement, financial independence for women. And it affects the way that people save for retirement. So what do you think about this?
I think it's interesting because I think that the other side of that argument is that less people are having families. So I find it curious that more millennials are waiting to get married, don't have kids. And so it's interesting that you hear about that on one side. And then I see this, headline that 200,000 working mothers have left the workforce. I think it's a problem. I think they're right though. It's like if your spouse if Cassie's, making 5,000 a month or whatever it was or is, and healthcare costs or childcare costs 5,000 a month, I'm sure these people are saying, "Why are you working?" And wouldn't you rather Cassie, and I'm just using your wife, Sarah, whoever, raise the kid versus some stranger? If the money is a wash, wouldn't the preference be for the mom or the dad? Because there's working dads that left the workforce too. But
sure.
And I think, I just heard this from one of our teammates that her husband, he's being forced to go back to office, and the work from home is kind of being evaporated. Well, so I think that's what they're talking about. This flexible work is evaporating, and more employers want people back to the office. I think that's another fascinating topic in itself, is that everybody thought that this work from home was going to be a permanent change. And more companies are realizing that it's not a good thing. It's not good for culture, in my opinion, to work from home. I get that some people are able to do that, but I don't think humans were made to work in their bedrooms at their desk for 8 hours a day in their t-shirt and shorts and not talk to anybody other than on InstaChat, on Slack or WebEx. I don't think humans are made for that. I don't think it's healthy.
I agree with you.
But the key here is, the key here though is that you need a plan. So if you're planning for retirement as a couple and one of your partners has stepped back from work, the key here is that you want to make sure that your plan reflects that shift in income, that the contributions have lowered, and that your future Social Security benefits will be impacted. I mean, Cory, you did this. Cassie stays at home, and I'm sure you pivoted and adjusted the plan, and you guys just accounted for it. So I'm not saying it's good or bad. I just think you have to be careful, because I'm sure there's also this dynamic where if somebody's not contributing financially, you've got to get clear on that, because that can really make somebody feel small. And I would not want that. I would not want the divorce rate to kick up because of that also. So you've got to make sure that, you as a couple have a plan, and that you're not only looking at the financial impacts of this, but you're also talking about the psychological. And it's okay though. I think it's cool. I don't think there's anything wrong with that. I don't think it's a bad thing. I think it requires more planning is all. So
absolutely. Yeah. I think changing that planning, that lens for planning is smart. And I think that this is a perfect example though of where financial planning actually fits into real life, right beyond just a spreadsheet. And that's why it's so important.
Yeah. How did your plan change, Cory, when Cassie decided to retire?
Yeah. So retire. She might like to hear that. I don't know if she'll be permanently retired, but yeah, I hear you. So what we did personally was, when we actually got married, Jake, what we started doing is we started practicing living on one income. So we did that when we got married while Cassie was still working before we had kids. But for example, the insurance, health insurance is a big expense, right? And that's part of this for people, is that if childcare costs are up, somebody's staying at home, right? You still have to manage the healthcare piece. So basically, we just had to start factoring into our financial plan, Jake, what the cost for healthcare was going to be for Cassie and ultimately for Daisy after she was born, and recognizing that that's going to be an expense every year. And I could be frustrated all day long about the cost, but the reality is we're going to pay for it. So I make sure that it's built into the plan.
Yeah, good. That's cool.
And the way we save for retirement is still keeping us on the right trajectory long term.
Right. And that's all matter. You just pivoted the plan, right?
Correct.
And Cassie was much happier, and now she's at home with your daughter, and it's awesome, right? I would hope.
It is awesome. It is. It's great.
Could you imagine if she was working?
Right. Yeah. And I think about it all the time, almost every day, because we have a lot of friends that have young children that, mom and dad are both at work, and it's just a totally different dynamic.
Yeah, good. All right, good. All right, let's go to number 3 here. Inflation is up 2.7% year over year, and shelter is actually leading the charge, even as food and energy have flatlined a little bit. Core inflation, though, Cory, is still at 3.1%, which is above the Fed's 2% target. I know you get fired up about the Fed's 2% target.
I do.
But traders are betting on a Fed rate cut in September. And certainly that's not guaranteed. But what are your thoughts on this? Thoughts on inflation and a potential rate cut next month?
Yeah, I thought that we typically would raise interest rates when there was inflation rather than lowering them. But again, the 2% target, the actual inflation rate, has been above that for like 5 years. So I don't even know how relevant that target is.
It's really cooled though. Wasn't it like at 9?
It was, yeah, in 2022.
Yeah.
Yes.
So I would say inflation isn't gone. It's just wearing a different outfit. And so if you're retired or you're planning to retire soon, You need to understand how shelter, healthcare, and lifestyle costs change over time. I think everybody has their personal inflation number, right?
Yes.
My inflation number is completely different than yours, especially now that you have a kid.
Yep.
Completely different.
That's
You
right.
know, if baby food goes up, that's going to affect you way more than me. If golf balls go up, it's going to affect me way more than you. So
that's true. Yeah, I will be unaffected.
Yeah, that's right. So the key, though, if the Fed cuts rates in September, like you said, inflation or not, as far as your portfolio is concerned, your bonds may go up, which would be cool. They go up in value if rates drop. The real spending power for retirees could change because rates are a little bit lower. And then the cost of living adjustments on future Social Security earnings may also be lower. So, I think rates are a tough thing for the Fed to juggle. I think if rates are high, you don't borrow as much money and you use high yield savings accounts. I think if rates are low and you need to borrow, that's the time you want to borrow, and make sure that your money is invested appropriately. So you just have to manage it and juggle it. These are very small numbers, 3.1 versus 2 versus 2.7, that I don't get caught up in it. So we'll see. We're just going to see how it shakes out. The key here, though, is with our financial plans, we keep a static inflation number in there, and we can toggle that number up or down, Cory, for our clients. And so we keep it in there. But I always like to tell clients, though, too, that don't get too caught up on cost of living adjustments, Cory, because in my experience, doing this for almost 20 years and working with hundreds of families, most of my clients don't spend more money every year. Do yours?
No, not especially not alongside with inflation. But I recognize that you made this comment, Jake, 3.1, 2.7%, et cetera. The question is, how do people actually feel that inflation, right? And I know something that I hear about often is, insurance premiums, right? And how those feel like they're just running away on people in the wrong direction. That's not how that's captured in inflation, is a question. Grocery costs that don't really feel like they reset, that they just continue to move higher. So I think the main point.
Yeah, but they're not going to go down. Do you think they're ever going to lower grocery costs? Yeah, it's not going to be cheaper. I'm happy if Rachel and I spend less than $200.
Yeah.
What do you spend at the grocery store?
Sure.
Do you even go? Do you go, or do you have shopper for you?
We go to the store. We do both.
Get them delivered?
Actually.
Yeah. What do you spend at the grocery store? I'm curious what a family of 3. Do you know? Do you even look at it?
On a weekly basis?
Yeah.
On a weekly basis, it's between $200 to $300.
Wow. Yeah. See, I try to keep it below 200.
Yeah. My point, though. Sorry, Jake.
But my point is, I don't. But here, hold on. I got a point here.
All right.
My point is, Cory, that's never going to be below that, in my opinion. It could be. I could be wrong. But your grocery bill is never going to be less than $100.
I think you just made a really valid point around this whole thing, though, Jake, which is
Go ahead.
People, me, you, anyone listening to the show, we don't live our lives and survive on inflation rates. We live our lives and survive on the actual cost of living, right? So inflation can cool off, but prices are still meaningfully elevated from where they were. And I think my perspective too is that's just what's led to a lot of change that we've seen in our country. The political environment, people's stance on a lot of things, the cost of living and affordability is a major issue for people that have money, and it's an even bigger issue for people that don't have much money.
Yeah, I think America, they would argue, is getting more polarized.
Totally.
And I don't know what that's probably another subject for another show, but I don't know what the answer is there. But the key with the individual viewer of our show or listener is that you just need to review the inflation assumptions in your retirement income plan. And if you're working, the best way to overcome inflation is to grow your income.
That's right.
And if you're retired, the best place to overcome inflation is to have your investments ideally earmarked for certain assets that do well in inflationary environments. Because you can make money. If you have high inflation, my point is hopefully your portfolio is making way more than inflation is costing you. And so if you can keep your portfolio growing faster than inflation, then you can keep up, Cory. And if you can keep your income growing faster than inflation, then you can keep up. I think it's people that lose sight of that and don't think about that have trouble.
Very good.
So it's all about awareness. Right. It's all about awareness. And let's meet with our financial planners so they talk about these things. Good. What's the next one?
The next one here, Jake, gold gets a pass. Safe haven stays tariff free. So gold just dodged a bullet. President Trump reversed a move that would have actually put tariffs on Swiss imported gold bars. And basically the reversal here avoids disruption in international gold flows. Gold still remains a stable hedge in portfolios amid rising debt. global political uncertainty, potential dollar volatility. So what do you think about this, Jake?
Yeah, and just to be clear, this is not an endorsement to buy gold. Cory's just kind of saying generic things there, but I think it's interesting. I think these tariffs are proving to be very powerful. We've seen that since April, that markets and assets can swing. Gold has very little intrinsic value, so I'm not a huge fan. I think if you want to have a sliver of it in your portfolio for diversification, okay, but we should talk about it first. Like again, this show is not advice. Gold has its critics, but at the end, if a retiree wants some to diversify, I don't think it has to be the worst idea. A lot of people don't understand that gold is one of the worst performing asset classes of all time, if not the worst, actually, one of the worst. So you just got to be careful with it. I think there's still a lot of swinging going on with these tariffs that I don't like. I wish we could get things negotiated and move forward with them. We don't typically recommend precious metals directly. We would want to invest in a company that's profiting off of gold versus just raw gold. But the key here is review your allocation, understand what your exposure is, and understand what it's designed to do. Gold just sits there. I mean, there's not a lot of intrinsic value, so you just be careful with it. I'm not a huge fan of it as a raw material. You have any other thoughts on this?
I agree with a lot of what you've said. I just think the interesting part of it, Jake, though, is that gold is my perspective is that gold is supposed to be a neutral reserve asset. And like, that's one of the reasons that investors trust gold. I guess trust is the right word. It's because it's supposed to be one of the assets that Washington or Wall Street, doesn't depend upon to function. So I just think it's interesting that even something like gold could get pulled into this trade war conversation. And it's interesting that without this reversal, that it could have potentially disrupted the way that gold flows around the world. I think that's the whole reason that it's so important for people to plan accordingly.
Yes. Yeah. And stay diversified is the key here. Yes. Stay diverse. All right. Time for a quick commercial, Cory, as we're rolling through these hot topics. But again, thank you to all of our audience members. Our subscriber count is growing. Please like and share our content. Give it a thumbs up. If you want a free copy of my ebook called Retiring Right, Smart Steps for Exiting Corporate America, there's a link in our show notes here, or just email Luke at falconwealthadvisors.com, and Luke can make sure he directs you to the form to be able to download your free copy. Also, I'm out there on Instagram, Jake_Falcon_CRPC, and Cory is Cory Bittner KC. All right, Cory, next hot topic here.
All right.
Ford fuels the future. EVs go affordable. So Ford is dropping $2 billion to make American-built electric vehicles a $30,000 truck designed to disrupt the entire EV market. It's coming out in 2027. They're going to have domestic battery production, Cory. That equals job creation and tax incentives. And Ford is betting on the broad market, not the luxury buyers. So what are your thoughts on this? Would you go buy a $30,000 electric truck? I can't do it. I'm an oil guy. I like oil.
We wouldn't have electric vehicles without oil. That's the irony, right?
Right. I don't. Why wouldn't you buy a 30,000? That's pretty cheap.
That's a whole different ballgame, right? If they can actually deliver on that, like that will very much expand the buyer pool. It probably shifts the economics of the auto industry if they can, pull that off. More jobs is a good thing.
Man, they're shooting an arrow right at Elon Musk, I think, with this too.
Seems like it. Yeah, absolutely. Trying to catch, basically Tesla and some of the foreign rivals. Yeah, I think it's interesting. But is it Ford basically swinging for relevance?
I don't know. Isn't Ford the F-150 still the number one sold truck? I bet it is.
I'm not sure for a fact, but I know that that has been the case historically.
Yeah, I just find it interesting that they're going out for the broad market and not. I just feel like
isn't the electric vehicle hype cycle? Sorry, Jake, go ahead.
What's hype cycle mean?
Like the electric. The shift towards electric vehicles and the hype around that has very much cooled off from where it was just a couple of years ago.
So you think they're late?
Feels that way. We'll see. I don't know.
I think a $30,000 pickup, mid-size pickup, would probably make sense if you had a fleet. So you got to think of like a Napa Auto Parts maybe, or like a Enterprise Rent-A-Car. Mm-hmm. Like Enterprise Rent-A-Car could probably buy the heck out of these things and rent them out to people, or U-Haul.
Right.
So I think it makes sense on fleet vehicles.
Yeah.
But heck, I mean, if you're part of the broad market and maybe you're I don't know, blue collar and you can't afford a 80, because some of these Fords are like pushing $100,000 for a truck,
if not more. Yeah, that's right.
So what's wrong with I don't think there's anything wrong with a $30,000 pickup. I'm not a fan of EV personally. I'm all for helping the planet and saving the planet and doing those things. However, I'm just not sold on EVs. I'm just not a fan. I grew up in an oil town and I'm okay with it. As long as they're doing their part to, help protect the environment. I think EVs are going to make sense on fleet vehicles, not the consumer, personally. I'm not going to put a freaking
Makes sense.
charging station in my garage. I'm just not going to do that.
Yeah. I mean, and another serious point around all of that, though, too, is that like with electric vehicles and everything else, like it just creates a tremendous energy and power need that we just, that we recognize. There's all kinds of things that are going to demand power and electricity in the future. There's a lot of questions about how strong our grid is set up for that. Like the demand, if all of us started buying electric vehicles, like practically, what's the real impact?
We couldn't do it.
Right.
Now, let's be clear, though. You test drove a Tesla when they first came out, and you flew our heads back in that car. I rode in it with you.
That's right.
They're cool.
I didn't buy it, though.
They are cool. I'm not discounting anyone out there that has one. I think they are cool. It's just not for me. This is not for me. But a $30,000 truck, I mean,
that'd be a game changer, I would think, in the market.
It's so cheap. I just don't know how they're going to be able to produce a quality truck at that level. But I'm not an industrial material manufacturing guy. I don't know that answer, but it's interesting to me. So
maybe those electric trucks will drive themselves too. Maybe sooner than we think.
Yeah, I don't know about all that. But here's my $1 million question: is do you believe traditional car companies can outmaneuver Tesla and the other startups? I said the other one, Rivian, or like you mentioned, are they just trying to catch up? Do you think Ford will jump over Tesla's truck? That's my question.
If they can roll out a quality truck at $30,000, yes, I think they could.
Yeah, that Tesla truck's ugly.
Cybertruck.
Yeah.
You know what I like about the Cybertruck, though, Jake, is like when I was a little kid, people talked about the future and what the world was going to be like. I feel like a Cybertruck is like what people envisioned we would be driving in the future.
Yeah.
But it does feel a little. My perspective when I look at it on the road, though, is it feels a lot different than everything else.
Does it even have a bed? Can you throw rocks in the bed of that?
I don't know.
That's what's weird to me.
It's closed in, right? It's closed in.
I don't think you can. I don't think it works like a truck.
Yeah, I don't know.
So how can you call it a truck? I don't understand. Like, I would buy a truck if I moved a lot or had to haul rocks or wood. That's why I would have a truck. Like, and I don't understand how you can call Tesla a truck if you can't do those things with it. I don't understand.
Yeah, I don't know.
So, all right, let's go to the next one.
All right, Jake, we'll bring it home here. Paramount's Power Play. UFC comes to streaming. So Paramount just punched its way into the live sports world, grabbing exclusive US UFC rights for $7.7 billion. So Paramount Plus, the streaming service.
Do you have Paramount Plus?
I do. It's going to stream 43 UFC events annually with no pay-per-view fees.
Nice.
Which is a big shift from ESPN's sort of a la carte model. And the conversation around this, Jake, is the rise of, streaming consolidation, premium content wars, companies seeing, live sports as being sticky for subscribers, and the tech and media sector investment opportunities.
Yeah. So what do you think about this? Are you a UFC fan?
I am not. No, I'm not.
43 is a lot.
At 7.7 billion is a lot.
I mean, that's almost a fight every week. Will it get not as special if there's one every week?
I don't know. It's pretty popular right now. I don't know.
Is it?
Mm-hmm.
Is UFC popular?
Yeah. Oh yeah, very popular.
I didn't know that.
Yep, very popular.
So the key here is and our clients don't really have this issue, but if you have a concentrated tech or media holdings position, these shifts could be big. And if you're building a dividend income portfolio, remember content still drives cash flow, right? So it's all about the content with these companies. But here's a question. Would you cancel Netflix or Disney Plus for sports exclusive content? The market's thinking people are going to do that. I'm not going to cancel Netflix.
No, I don't think so.
I don't watch. I have Disney Plus. I think Rachel and I have it for some weird reason, but I like Paramount Plus. Actually, it's actually done pretty. I'm not going to pay for that new. Isn't that new ESPN one like $29.99 or something crazy?
Yep,
$30 a month. I'm not paying for that unless they play the Royals on it. Then I might do it. But
It's all been so fragmented.
I know. I don't like it. It's confusing. You know,
and the bundling
TVs
costs,
Go ahead.
like those are going to move higher, right? Like you just said with ESPN. I mean, even if you don't, maybe you pay for one pay-per-view fight for UFC, for example, right? And you probably pay what, 80, 90 bucks?
Probably.
Versus paying a subscription over the course of the year to have access to the same content. It's very interesting. But no, I don't think that, I think that consolidation is inevitable. Like obviously the media landscape has just continued to change. And it's an interesting shift in the direction, but I think that Paramount probably understands that sports are what is, driving a lot of eyes. And that's probably why they're taking this, a concentrated bet.
Yeah. I'm smart people. All right, good, Cory. Let's wind it down this show. So first off, I love for our audience, if you're a regular visitor, or if this is your first time, please send us some feedback. I liked today's show, but if you've got any feedback, just email Luke at falconwealthadvisors.com. And Luke will make sure if you want to do you want us to keep doing it this way, or do you want us to go back to the old way? We want to test this out for a few weeks. I like talking about current hot financial topics, Cory, because I think it's very relevant to our audience.
For sure.
I am starting to shift after today, Cory. I thought the debt problem was purely academic, but you're convincing me and researching it a little bit for today's show. I'm recognizing that it could have more negative implications, but I'm telling you, up till this point, I haven't seen a reason to worry about it at all. I'm not saying it's right, but I could see potential for issues down the road, because you got to remember when Clinton balanced the budget, the people were still celebrating. It's not like there was any pain.
Mm-hmm.
So maybe a politician will figure that out. I don't know how, but they'll figure that. Yeah, maybe going to double our taxes is what they're probably going to do, and then there will be pain. So
right, but that'll bring down the debt, right? I mean, Anyway.
So you got any personal things you want to share as we sign off here, Cory? Any updates or anything you want to share?
Yeah, just one other thing I would share, Jake, is that so everything we've talked about here, right, as far as today goes around government debt, inflation, families, getting squeezed, whatever childcare costs look like, companies taking these big bets. Like, I think it's clear that, my responsibility, Jake, yours, I think for the people that are watching this is to build a financial plan and to plan for this stuff accordingly. That's the real conversation, because that's what you need to hold up, because we live in the real world. But also to focus on the things that you can. Like you asked the personal question, Jake. I started working out with a personal trainer recently.
Good for you,
and I've done this to enhance my quality of life now, but also enhance my quality of life.
Good for you, Cory. Bravo.
Quick
update. I'm reading The Great Gatsby. Are you in my book club this month?
I'm not in it this month.
So I'm really enjoying it. I don't know when I read it or if I read it. I'm sure I read it sometime in my youth. But you know how we read James, which was Jim's perspective from Huck Finn? I wish that they would have some author out there would write it from Gatsby's perspective. I think that'd be really cool. I think someone needs to do that. It's not going to be me, but I think somebody needs to do that, because I'm reading it from, I think the guy's is Nick. I think the guy's perspective and the character in the book is Nick's perspective. I want to hear it from Gatsby. Or how about Daisy's perspective? They could. Yeah. There's so many of these books they could do that with now that reading a classic every now and then. I think it would be really cool if somebody did it from Daisy's.
That'd be cool.
Or Nick's perspective. So anyways, I'm enjoying it. We're wrapping that sucker up here in probably next week or two. But thank you, Cory. That's all the time we have for today. Thank you all for tuning in, and we hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website at www.falconwealthadvisors.com and click the Contact Us button if you'd like to meet with Jake and his team.